Good afternoon, everybody. Should be live on YouTube. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure, and position disclosure. Nothing new after today. Happy that I lightened up yesterday. Was a bit nervous about it this morning on the gap up, but as we're about to talk about, markets were destroyed today. So, looking back, it feels like a long time ago at this point. Looking back at this morning, market was gapping up again after a day 4 up. And we talked yesterday about how yesterday was a great day to lighten up positioning. This 4-day up move, slight extension to the upside, was setting up for very limited upside, even if CPI does come in cooler than expected, which people were thinking that's what was going to happen, and pretty much the opposite happened, which is why we got destroyed today. But so yesterday was just a great opportunity to lighten up. This morning we were gapping up another 0.5% or so, and I was like, oh boy, like here we go, we're going to gap up. CPI is going to be light, we're going to go, and I'm going to be annoyed that I sold some stuff, but whatever. But pretty much the exact opposite happened, right? So CPI year over year, I believe 8.1 was expected, came in at 8.3, down from 8.5. And then even, I think, more troublesome to people was the month over month number, which was supposed to be a negative number, down, I believe, 0.1%, and came in actually plus 0.1%. So year over year and month over month missed. CPI still hot, inflation still hot, and we got the Fed meeting coming up. So that number came out. Markets got absolutely destroyed pre-market, and that led to a very massive gap and go to the downside. I believe we were down like 2%, 2.3% or so around the open. And it was just a fairly classic gap and go to the down day. So today was so usually these gap and go down days start with a green or start with a red 5-minute bar. Today actually didn't, which was interesting, and that was coupled with Apple opening below 160 and trading back up through 160. So buyers kind of stepped in a little bit early on, but very quickly they lost it. When you see these big gap down days and pretty much like the 3 scenarios of the bottoming, that for the most part it's usually 3 scenarios. We talked about it not last Thursday, but 2 Thursdays ago on this day. I think it was this day. Yeah, when we were expecting like a bounce off that 390. Oh, that's Apple. That's why that looks weird. Yeah, this day for SPY. Basically 3 scenarios. You usually either see buyers step in right away and you open and you just like rip higher. You get like panic selling for the first 15 to 30 minutes, and that first 15 to 30 minutes is just red bar, red bar, red bar, red bar, red bar, and then you kind of just like V bottom back up, or just you capitulate, go higher low on the 15, so on and so forth. Or scenario 3, you trade down, you find a base intraday, and then you spend that entire day basing out. Maybe you poke a new low in the afternoon and don't really get any follow through, and then that base rounds up into the close. So that first scenario of buyers stepping in right away almost had a glimmer of hope for a little bit with that SPY bar and with Apple trading back up through 160. But within that first 5 minutes, Apple lost 160, and that was really it. Came up, tails off 160, tail off 160, tail off 160, and pretty much the rest of the day is history. So gap and go to the downside days, I mean, this is typically what they look like. We also talked about how you usually can't wait for the 5-minute EDMA to catch up, because it's just a bit too long. But there were some intraday shorts to be had. We talked about SPY 402 here. And that was similar to Apple 160 at the time. Apple was tailing up off 160. And it was basically, can you buy SPY through 402? is this going to be like a little shake and bake and then we rise back up? If so, look for SPY through 402. SPY went through 402, tailed right back down, and then you had this bar, and we talked about shorting through down off against 402 there. That broke down, comes back up, fairly clean trend. Spend the middle of the day basing out, and at this point we're saying, okay, so SPY like 395 is possible today. We actually got all the way down to 392, but 395 is possible. Or either like we go down to 395 and just close horribly, or this 398 bases out and we trade back up through 400 in the afternoon. So 398 tried to base out a little bit, started going a little bit too early. Usually they say you don't really want a midday rally on these types of days. You really want it at the end of the day into the close. So kind of curling up here a little bit, but most of us were aware and paying attention to our bigger time frames. So like our 15-minute chart even was trying to break up. It was such a big gap down at this extent. That was just like 30-minute correction, and that's all really that gap was. And a lot of us saw this in real time. This 30-minute coming down, SPY very, lacklusterly, for lack of a better word, grinding kind of its way up to 400 just into this downside 30-minute ADMA. And that just spilled us really back over into the close. So yeah, and I think some of you guys did actually reshort over here around this area in this 400 here. But I think, overall, obviously it's a bad day if you're a bull, right? Or like if you're super net long or anything, it's a bad day. Hopefully it wasn't really that bad of a day for you guys. I mean, I'm down P&L. If you got any long swings on, you're probably down P&L. But hopefully you guys were ready for this. I mean, we had this 4-day bounce. We had opportunity to trim and lighten up into it. We talked about trimming and lightening up into it. So hopefully you didn't get too hurt because, one, you weren't over positioned to the long side into this. And two, we talked about it a lot today, just these day ones. It's really hard to step in on these day ones. I've done it before, and I've made the mistake, and it's cost me big time, and I've learned from it. It's not impossible. Nothing's impossible in this market. But on, a day one, it's really hard to step in. It's the same thing. I mean, this is to the downside, but it's the same thing as something breaking out on a day one. Like, you don't want to short a stock that's breaking out. Even if it's up a lot on the day, if it's having like a big breakout, you don't want to short it on a day one. You want to wait till, day 3 plus in extension. So same thing on the downside. So, hopefully, one, no one got too hurt today because you weren't over positioned into it. And then two, hopefully you didn't really kill yourself trying to buy today. I definitely don't, blame people for trying to buy stuff. There was opportunities to buy stuff. But in terms of like buying, it's one thing to buy versus pivots or buy through levels, but buying without an out and just relying on a rally to come in, it's very hard on a day one. It's not that it can't happen, but it's hard on a day one. So hopefully no one really got hurt in a big way by, buying without an out, kind of like counting on a rally there. So that's the market. I mean, pretty destroyed here, and hard to not expect downside follow through. We are in a downtrend, lower highs and lower lows, below moving averages that are sloped down. So, we'll see if we can make another bottom somehow. But, unless we have like a giant green candle tomorrow that negates this, you're going to expect us to at least test this 390. If not worse. 390 is a level, though. You would think for us to at least test this. And then, do we test it, hold it for a couple days, and break back up? We'll see. There's going to be a bottom, or I guess a bounce is a better word, I should say. But, day one. So the other thing that's interesting about this, so that's today, right? Now looking forward, we have more econ numbers this week, starting with PPI. Tomorrow morning, another inflation number. That's at 8:30 in the morning, and then Thursday is retail sales, which we'll see how that is. I feel like it's not gonna retail sales might be good, so we'll see how that is. But that's the opposite. That's like the I guess one of the counter arguments to this day one is we have more catalysts this week that could negate this, right? This was like a fundamental. It's similar to like SPY having like it's like earnings, right? Like technicals don't matter as much when these fundamental events come into play. So today is like an earnings day for SPY, I guess, in a way, and they missed guidance and they missed their earnings. But we have more catalysts this week, tomorrow morning and Thursday morning as well. So it's not like this means we have to go to year lows or anything, but it is damaging, and it's damaging. Market is guilty until proven innocent, right? It's damaged. We are damaged until we get back above this 402. So we need to get back above this 402, not even 400, 402. At least this open, we need to get back above. And you would expect us to continue this trend down. The trend is your friend. We are in a daily downtrend. These moving averages are sloped down and pointing down. So we'll see. If tomorrow morning PPI is the opposite reaction of today, we're not extremely extended to the downside, but we are at 393 with the 80 May at 400. Even if the 80 May is at like 399-ish tomorrow, I guess technically that is downside extension. So look, it's not, you don't think you have to buy. I was saying this in the afternoon. I don't think you have to, just because it's a big, bad, bloody day, I don't think you have to nibble for fear of missing out on PPI tomorrow in case it's the opposite reaction. There are levels to buy back through. So the fact that we closed so low actually makes it a little bit easier, because I didn't think we were going to get too much below 395 today. Hopefully they don't gap us up too much before PPI tomorrow morning. But if PPI is good, you could buy SPY back through 395. You could buy Qs back through 295. The play I'm going to be looking at is Tesla, which I guess I could talk about a little bit about that. But this Tesla relative strength, for sure. And we talked about that earlier this week, too. Just looking at like this Tesla chart compared to this Apple chart, Tesla's been so much relatively stronger than Apple up until yesterday, but then that quickly reversed today. This daily candle on Apple is crazy. But Tesla held up pretty well today. Honestly, this Tesla chart is still bullish. It's, I guess, not quite in an uptrend, kind of neutral-ish, but moving averages are, for the most part, somewhat sloped up, and we are above them. So I think you can watch Tesla, this 295 level, or 296, but 295 level as well, to buy it back up through if we're having that opposite reaction for PPI tomorrow. And that was another play that some of us took actually this morning, recognizing the Tesla relative strength. Just SPY, Apple, not great first couple, 5, 10, 15 minutes. This Tesla held up well, and I think some of us took this back up through 275 here. And although this rolled over and made new lows, look at what this did at the end of the day compared to what SPY or Apple did, right? So really, really impressive relative strength from Tesla today. If you are looking to go long tomorrow off market strength, Tesla should be the good one to go to based off the action today. And that's if we have the opposite reaction of PPI. It's going to be a flash, right? So like if the number comes out and we trade down, no harm, no foul, because you're not, you just won't be getting triggered because you won't be going up through the levels. You'll be going down even more, which is not impossible because, again, today's the day one. You typically don't, for me, the rule of three, like 3 plus, even a day two can be a little bit scary, but 3 plus in a row, you can start to look the other way, whether it's up, 3 up days, you chill out a little bit, 3 down days, so on and so forth. Let me think. That might be all I really have to talk about. I mean, I guess there's not like a ton really to talk about because one, just CPI totally destroyed us today. Not too much more to add there, but we still have more. Again, we have the numbers to see for the rest of the week, so I can't go off on like a bigger picture tangent based on like you know what I mean, a bigger picture thesis, because this could easily, like Evan had said this morning at 8:29 this morning, everyone's all bulled up and inflation, peak inflation is here, like woo woo rah rah rah, and then at 8:31 this morning we're headed to new lows in the market. So it could be the opposite again tomorrow morning. I'm not saying it's gonna be, but things can flip on a dime for sure in this very illiquid market that we're in. So, I'm not going to make a bigger picture prediction yet because we got to get through the rest of the numbers for this week, and then by Thursday morning we'll see how we're looking. But yeah, I think that's all I really have to talk about. Obviously a pretty brutal day, but not to say like we were ready for it, but we were somewhat ready for it. So happy to answer any questions, comments, concerns, complaints, anything like that. Let me just open up YouTube real quick as well. Hey Pat, will you share a bit on how you think about probability of success of a trade? I've watched Eric's video on this and I understand that to some degree risk reward and POS are inverse. I was thinking today how that's probability of success, probability of success are inversely related. I was thinking today how POS combines two probabilities that reaches target within a time frame, that price doesn't touch stop. How do you define, quantify, or just think about these? Sure, so that's like obviously not an easy question to answer, but I'll do it as simply as I can. Ow, I just hit my knee. So it depends, first of all, on what type of trade you're taking, and I talk about this a lot because it's important. Not every type of trade is the same trade, and not every trade that you're taking should be thought of as, one type of trade, black and white trade. Maybe as a newer trader, you should kind of like focus on, one, I don't know, execution strategy or one method, or, kind of risking the same amount per trade and kind of, just following the basic rules. But as you expand your palette of types of trades that you can do, and you understand, and you start to really understand like how the market moves and how money moves throughout the market and throughout, the bond market to the equity market to the money market, so on and so forth. You start to like broaden your horizon for types of trades that you can be involved in and manage risk properly. So it depends on so first of all, I said I was going to explain this simply. It depends on what type of trade you're doing. So are you doing a scalp trade? Are you doing a day trade? I guess that's the same thing, like a scalp trade or a day trade. I feel like there's like kind of like three types of trades for me. A scalp / day trade, a day trade that might turn into a swing trade, a swing trade. Yeah, that's pretty much it. So a scalp / day trade for me, it would be like the extension trades that I talk about, where like and I didn't do it today because I don't like to do this at the end of the day, because I've just seen it fail enough times where it should basically work every single time. But if you're doing it at the end of the day and you get those big money end of the day flows, it can just go into the close, and then you don't want to be holding that overnight, so on and so forth. But say, you're buying this extension in SPY at 392, when SPY's at 392, your 5-minute ADMA's mid 393s, and your 15's way higher, your 30's way higher, that's a good extension trade in my book. I just didn't like the time of the day there. But say like you're taking that extension trade, like that's a scalp slash day trade for me. So, I wouldn't really quite have an out in that, and my targets would be, 2, 5, 15 minute ADMAs. And if SPY pops up to there, I'd take my money and run. I'm not buying SPY there thinking it might turn into a swing trade or something like that. So like a day trade, scalp trade, you usually have smaller targets and you're going for smaller money, but I feel like you should have like a higher probability of success. And then a day trade that might turn into a swing trade would be like buying SPY on a day 3, day 4 down into support, and maybe 390 holds, maybe it doesn't, but if it does, we got plenty of room on the daily for this to turn into a 2, 3, 4 day swing. And then if that works out, we'll see what kind of swing it can turn into if I don't get stopped out. And then you got real swing trades, which in my opinion are a lot more just fundamental, and you don't really care what the stock does because it's such a bigger picture thing, and you can just like trade around a core position because you're an active trader, so you don't want to just sit there and hold things. So first of all, you need to just like figure out what type of trade it is that you're doing, and if you don't know, then think about it and figure it out, because you should know. And if you're a newer trader, it's not that like it's impossible to swing, but just you probably shouldn't be trying to swing. You should really just be focusing on like the smaller time frame stuff, because that's how you really get good at executions. I'm just rereading the end of your question. So you're thinking how today POS combines two probabilities, reaches target within a time frame. I mean, yeah, so you just got to ask yourself like what type of trade it is, and then once you figure that out, like that's how you trade, like then, because if the different types of trades that I'm talking about, you trade them differently. So like a day scalp trade, where for me that's an extension trade, I don't have an out in those extension trades because it's extended. Like it could just become more extended. But if it becomes more extended, that's an opportunity for me to get better prices for the extension correction that I know is going to come at some point, whether it's through price or time. But even if it's through time, you still get mini bounces in those bear flags or bull flags. So that'd be something where, I'm probably taking like a little bit bigger size and using a little bit more leverage, but it's because I'm going to be in and out of it, versus then like the next type of trade, a swing trade that might turn into, or sorry, a day trade that might turn into a swing trade. That's when you're buying versus like big daily levels. So that's when you're buying SPY down at 390 when 390 is support. And you're kind of like leaning into it versus a level, and maybe you're being a little loose around 390, but it's not impossible for SPY to go to 385, 380. So, maybe you're using an out of like 389.50 or 389, but you're not buying 390 with no out, but it's a good level. And then if you're doing something like that, I mean, then it depends on the chart too. That's why I'm saying like it varies so much. Because like this type of trade, you're buying downside extension into support, but that's different than buying SPY 390 here is a different type of trade than buying SPY 390 here, because this is a wedge, like a base out wedge that breaks up. So you wouldn't, like, this 390 buy is different than this 390 buy. Right? Like, I hope that makes sense. And if, like, you're new and I'm talking a little bit crazy, I apologize. But, like, you'll definitely get the hang of it the more you stick around and listen. But, again, like, are you buying support? Is it downside extension at that support? Are you buying a base out, and are you buying SPY somewhere in here versus like these lows like 370? Are you buying the breakout of the base, right? Like there's different types of trades. Is it a breakout? Is it a base, rounded bottom, base out type trade? Is it a downside extension trade? So you got to ask yourself like how you're going to trade that type of trade. Again, is it a day trade? A day trade that might turn into a swing trade or something you really want to swing? Because you can buy downside extension that turns into swings. You can also buy breakouts that turn into swings. You can also buy in the middle of sloppy bases that base out and then eventually break up and turn into swings. So you got to figure out all that stuff. And then, so how do you define, quantify, or just think about these probabilities? Yeah, I mean, just based off, I guess, half charts and half sentiment, to answer like the latter part of your question. So again, it would depend what type of trade I'm doing. Am I buying downside extension? Am I buying in the middle? And that's not really like a great base, what I'm showing you there. That'd be something like what's like a good base? Like this Tesla, I don't know. This was kind of like a wedge too, but like, am I buying downside extension for a swing trade? Am I seeing that this is a wedge and I'm buying in the middle of the wedge versus the lows of the wedge? If I'm doing something like that, I'm probably gauging that market sentiment is bearish, therefore I expect this wedge to break up, even though these technicals might not look so clean at the time. If sentiment is bearish and positioning is low, a rally is more likely than if the chart looks like this and everyone's bulled up and everyone's saying Tesla to the moon. I'm probably thinking this wedge might break down. So am I buying like in here versus these lows, or am I waiting for confirmation and buying this breakout of the level? You gotta, depends on like all those factors. And then once you figure out like the chart type of trade that you're doing, then you just assess, again, how good the chart looks and then what the overall market sentiment is, which is really important to understand. And that's why we don't just look at charts, but why we talk about the Fed and the bond market and sentiment and positioning and like all that stuff, because that's how you anticipate a wedge being able to break out weeks before it actually breaks out or doesn't break out, right? And not to say you can like predict the future, but that's how you find your edges there. So I hope that kind of helps, Alex, and wasn't too confusing. VIX did price and time correct to 5 minutes 80 MA at 9:55, or VVIX. Oh yeah, true. Yeah, good eye there. Who was that, Rich? Yeah, good eye, Rich. So yeah, we're just saying while the market time corrected bearishly, this VVIX gapped up and opened and time corrected bullishly, and then didn't do too much today, and then that is quite a ramp at the end of the day there. That is quite a ramp up. How does this daily chart look? This daily chart looks scary, actually. Yeah, I mean, if technically it's not above this 96, but if this breaks above, I mean, that's kind of scary, to be honest with you. We'll see what PPI does tomorrow, I guess. But that's looking a little bit dangerous there. I guess let's look at the VIX too. Yeah, kind of similar. Such a big VIX day though. I wouldn't expect another big day like that back to back. I would expect 1 or 2 days of consolidation somewhat. Pat, if I was long Apple yesterday, would I get out, hedge, or keep a smaller position than you'd usually do going into CPI day? It's, I mean, it kind of depends. So it depends where you're long from. It depends how much of that original position you still have. Yeah, that's pretty. And then it depends like what other longs you have on. So if you only have 100 shares of Apple from not a great price, like if you have 100 shares of Apple from 160 yesterday, I probably would have kept very little to none. Maybe a little, but probably less than usual. But like if you're long Apple from 140 or something, then that's like a different story, right? Um, so it depends where you're long from, and it depends how much of that original long you still have. And it depends if you're overly long. If like Apple's your only position, that's different than if Apple's one of, 5+ positions. Um, but we talked a lot about lightening up yesterday. We talked a lot about it, and it was like this rally. I want to say like made it easy, but like it's not like we were just randomly saying lighten up because this event's happening. It was a really big 4-day up move. Um, it wasn't super upside extension, but just from 390 to 410 in 4 days. That's a pretty serious move. So it made all the sense in the world to lighten up somewhat. So yeah, but I don't know if you're just asking like in general, Ramon, or if you're asking about yourself. If you are asking about yourself, then feel free to either provide more details or if you want to like send me an email with more details. But depends where you're long from and how much of that original long you still have. But obviously, you wouldn't be going 100% long into it. Yeah, well, that's like the second trade I was talking about, Denver Steve. Short term risk for daily chart reward. Those are those day trades that could turn into swing trades, which you execute on the on the smaller question. Okay, cool. Yeah. So for app, yeah, if you bought it yesterday, definitely 25% or less. So less than usual. If you bought it yesterday and CPI wasn't this morning, I would say I wouldn't mind you holding 50% at the close. But because of CPI today and where the market was, I would have, 25% or less. So yeah, less than you usually would. Also because even though it kind of was like a day one for Apple, it definitely wasn't a day one for the market, right? It was a day four for the market. So if that makes sense. Yeah, Rich. I always appreciate because I think you have live VVX. So I always appreciate when you send updates like that because I don't have live VVIX. I'm too cheap. Too cheap. I'm doing short on Tesla today, but I feel it is hard. Did you see any signal based on an EMA or SMA? I mean, I don't want to say like you are stuck on the wrong stock, but we talked about the strength in Tesla today. Very impressive relative strength. And you can just see it, just how good the chart looks in Tesla in the first 15 minutes versus SPY's losing its low on the second 5-minute bar of the day. Apple's losing its low. Everything's losing its low, and Tesla's nowhere near its low. And that's why some of us actually bought this Tesla either on this bar for this move up. Um, so yeah, just relative strength versus relative weakness. And if that's like a new concept for you, that's fine. But definitely just try to observe that and learn about it because it is super important. Just and it's not every stock. Like, don't look at a random small cap stock and look at it and compare it to SPY. But if you're looking at like a Tesla or a Microsoft or an Apple or some like a big major cap company, then you can look at it compared to the market, and it's literally just as simple as looking at the chart compared to the other charts. And again, the first, what is SPY doing on the second bar of the day? Breaking through its lows. What's Apple doing? Lows. Microsoft, lows. I just typed in low. Lows. Nvidia, lows. AMD, lows. Tesla inside five, nowhere near lows. Like as bright as the sun. Easy to see. Relative strength, very very easy to see, and I mean, it works to the upside. If kind of failed eventually, but I guess to answer the first part of your question, did you see any signal based on the moving averages? Once this tailed here and this ADMA on the 5 caught up, you could have been shorting, and technically that high didn't end up breaking. But I would stick with my second point of just, I'm not like trying to say you were in the wrong stock, but like you were going for the short on the most relatively strong name today. So yeah, I hope that makes sense, Hemming. But always pay attention to these ADMAs too, and 15 is very important. Once this 15 finally caught up as well. In terms of relative weakness, did I hear correctly that you're eyeballing Tesla relative to other? No, I'm saying Tesla has relative strength. Tesla has relative strength. Actually, like very impressive relative strength today compared to everything else. Um, it's very just obvious on the charts. So that's why if we're thinking PPI could give us an opposite reaction tomorrow, and you want to buy something on the way up, I think Tesla would be the one to go to tomorrow, unless I guess some news comes out or anything. But Tesla above its 8-day, closing above its 8-day, which is sloped up, not a bad candle, and everything else is just absolute destruction below their 8 days, which are all sloped down. Below their 8 days, which are all sloped down, and those 8 days are also all below the 21, and Tesla's sloped up with its 8-day above the 21. So, great relative strength from Tesla there. What do I think of Weber short squeeze potential? I know it has high squeeze potential. So I know that this Weber has a high short float. I think in general though, you're just not gonna get it. You don't just get like random squeezes in random single names on random days. It just doesn't happen. For the most part, you need an event to trigger one of the names, and that one name typically triggers the other names because a lot of these short funds do it in like a basket, right? They have a basket of stocks that they're short, and they're short most of these stocks for a reason. So, yeah, it has a high short percentage. Put it in arrow, doji. I don't know. I mean, there's no, unless something happens tomorrow, like, I don't know, I guess you could watch the 7 level, but there's no reason. It just like doesn't really typically happen, and all these other spikes were because of the Bed Bath and Beyond, which that was an event that triggered Bed Bath and Beyond, and that Bed Bath and Beyond move triggered a GameStop move, and triggered an AMC move, and triggered your Weber move, and even like whatever, like all those garbage short squeeze whatever names. No, not Wish, Jesus. Um, but yeah, so don't over focus on a name because it has a high short float. It just waits, something might happen, something might trigger it one day, whether it's a Weber news or some other name that gets news, but you usually don't get random short squeezes and random single names on random days. It's usually an event that triggers one of those names that ends up triggering the whole basket of names. So yeah, definitely don't I wouldn't focus too much on Weber if I were you, at least for now, until something else changes. Justin on YouTube wants me to go over the DeMark indicator. Maybe tell when it indicates buy self info. Sure. So to keep it simple, because I honestly forget off the top of my head the exact rules for the numbers. It has to do with the high, the low, the open, and the close. But basically, and the DeMark. So this is TradingView. I use it on TradingView. The DeMark I use is called TD Sequential, and the author is Brobear. So if you go to indicators and you type TDSEQ TD Sequential, and it's this one by Brobear. So DeMark measures exhaustion, which is different than extension. Extension is when you get far away from equilibrium. Exhaustion is when you do the same thing too many times in a row. So there's two counts. There's 13s and 9ers. This one only measures 9ers. That's the only one I really look at. And basically, just 9er to the upside, 9er to the downside. Typically, that's exhaustion. This is upside exhaustion. This is downside exhaustion. It doesn't have to bottom perfectly on that day. It doesn't have to top perfectly on that day. No indicator is perfect. If it was, it would be ruined by now. So, but the basic concept behind it that I usually explain to people is, think of it like flipping a coin, and heads is a green day. Heads is a green candle and tails is a red candle. And what are the odds of, getting heads or tails on a coin flip? 50-50, right? But if you flip a coin 10 times and you get heads 9 times in a row, if you get one or the other so many times in a row, I mean, what's the probability of getting the same thing again? Is it still 50-50? Yes. Is it possible for you to flip a coin until you die of starvation and get heads every single time? I guess, yes, that's possible, but it's not really probable. So that's like the basic concept behind it, is exhaustion. Just you get, so many of the same type of day in a row, you're bound to reverse a bit. It's just the ebb and flow of the market. That's just how it works. So that's the DeMark, the TD sequential for you, Justin. And again, it's exhaustion. It's not the same as extension, because you can get exhausted and go sideways, kind of like you did up here. It doesn't necessarily mean you have to come back down. But when you get a 9er into extension like that, those are usually pretty good. Like I think this. Nah, I thought one of these major lows was a 9er. Oh yeah, back over here in before the March rally, right? Yeah, on S&P, and I think it gave it on SPY too. Yeah, this is the day that we opened down this was this day where we opened down huge and got bid right. That's one of those days where we opened to the downside huge and just boom, right off the open, boom. This was a 9er to the downside on the daily. So once you get extension and exhaustion, more things line up there. That just adds to the layers of probability, so to speak. Hey Pat, why is it that sometimes a candle is green and the volume bar is red? A candle is green because it closed higher than it opened, but the name is red on the day because it closed lower than where it closed the previous day. I think I just said that right. So let me find an example. I don't know if I can find an example right now, but say like SPY closed this day 395. So SPY closed this day 395. Say on this day right here, pretend that this green candle is lower a bit. So pretend it opened at 390, tailed down and closed at 393. You would still have a green candle, a green hammer there because the candle closed higher than it opened, but the candle still is closing below the previous day's close. So that's like where a lot of big money marks the price is the closing price. So if the closing price one day is lower than the closing price on the previous day, that asset lost value that day. So yeah, hope that makes sense, Pam. Yeah, exactly. Actually, yeah, exactly. So FCX opened at FCX closed higher than it opened today, so you have a green candle, but it's still red because it's still closed lower than where it closed yesterday. So FCX, even though intraday it traded up, it's still net lost value from the previous day. Hope that makes sense. Any other questions? 5 o'clock, so happy to wrap it up. But yeah, I mean, pretty brutal day, but don't. It's not the end of the world. It seems like it's the end of the world, but things can definitely shift. PPI tomorrow morning, so again, we'll see how PPI comes out. You got some levels to buy through. Hopefully, they don't gap us up over them before PPI. But if we do react positively, if PPI does come in cooler than expected, you got SPY 395, Q's 295, and my favorite Tesla 295. Great relative strength from Tesla today. Definitely one to go to for the long side if this market wants to trade back up. Cool. All right. Have a good night, everybody. Get some rest because tomorrow's going to be another crazy one, and we'll see you tomorrow morning.